The following is a presentation of TFNN. Live at TFNN, the Bull Bear Binary Option Hour. Brought to you by Nadex.
Let's go to Scott in Colorado Springs. Hey, Scott, what's going on?
Good morning, guys. How are you?
We're doing great, man.
I want to thank you for bringing this Nadex platform to our attention.
Oh, cool.
It's one of the most powerful things that I've seen.
Yeah, it is certainly a platform that not only is neat, but what's so sweet about it, folks, if you haven't tried it out yet, is that when you put your trade on, that is your stop. So what happens is this. Everyone's excuses all the time is that I moved my stop, I didn't put my stop. Well, that is your stop.
Yep, exactly. I mean, it's perfect. You can set your trades and go do something else.
Now, Tom O'Brien and Steve Rhodes.
And Darrell Martin, folks. We appreciate you growling and prowling out here with us. Right now, we got the Dow down 17, Nasdaq up 4, S&Ps are off 3.5. You get gold down $20, silver's off 61, bonds are off 6 ticks. And folks, if you haven't test drove the Nadex platform yet, come over to our website at TFNN.com. You can open an account right here, right now. They'll put $25,000 of funny money in there. If you happen to be in the Colorado area, we, Darrell and myself, are going to be at the Denver Tech Center on February 2nd. We have Nadex is sponsoring a workshop. The workshop is free, folks. We're going to be going from 8:30 in the morning to 12:30. We're going to be giving 10 ounces of silver away. Darrell's giving 5 of his analyzers away.
Oh, that's great.
Books away, newsletters away, the whole ball of wax.
Oh, I'm going to travel out there.
That's a beautiful thing, man.
That's right.
Darrell Martin, what's going on?
Hey, man.
How you doing?
Happy Friday. Doing good.
It's a beautiful thing. Friday, there's nothing like it. Every day is a great day. Friday, particularly a great day, I guess.
I know.
No doubt. So we get some volatility out here too, folks. Okay, and you know, if you haven't traded this Nadex product yet, I'm telling you, it's a product you want to take a look at. Particularly, you know, if you've traded futures, you have to look at it. Believe me, or in the currency market, because the difference is dramatic about the amount of money you're putting up. Versus a future product.
Right.
It's just, it's amazing. It really is, you know. We get action out here today, man.
So quickly, let's, you know, you great on CNBC this morning.
Yeah.
Just, you know, each time you're on there, each time you know, it's just like, oh, man, you just hit it out of the park. Today, I thought especially good out there, you know, because you're always so well prepared. And that's why I really talked about this morning, you know, as far as, you know, one of the things that, you know, I always like to look for tools out there.
Right.
And it's always good to model others.
Right.
And, you know, and you showed up, and the information that you had, you know, it's not just the basic information that continues to get regurgitated time and time again.
Yes.
And also really respectful to, in essence, I don't know if you intended it, but, you know, but because you've got people taking both sides of the trade, in essence, out there.
Oh, yeah, right.
You know, but the information that you were providing with regard to gold, why it was going, where it was going, and why was really...
No, I appreciate that.
Really good. And it was also nice. I don't know if you intended to bait Becky out there when you said, especially because of a couple equities yesterday, and you didn't give them to her. You made her come back to you. I said, I like that.
Yeah, what happened, folks, we have the link right on our website at TFNN. And so what happens, you know, in the markets in general, okay, is that you have the technical aspect, you have the fundamental aspect, but then what you have is the aspect that who are the operators?
Yes.
How are they operating?
Yes, yes.
And what are they going to try to do? Now, what happens in the gold market, folks, is that, and, you know, when I first did the gold report, so check this out. If we go back 13 years,
yeah,
the only fund that ever owned gold is that Fidelity owned 5% of Gold Club. That was it.
Yes.
There wasn't one other fund that owned anything.
Yeah.
Now, you got to remember something, folks.
Wow.
There wasn't even such a thing as the GLD.
Yeah.
There was no GLD. There was nothing. So now check this out. So the GLD right now is the 4th largest holder of gold in the world.
Right.
Okay? In the world. 87 million ounces. All right?
And there's no way to verify they have it, by the way.
Yeah, no, they have it. I'm not, you know, that's where the thing, these poor people that, believe me, it's
yeah, no, they have an insane amount, though. It's crazy.
Yeah, so. Well, anyway, so inside that context,
yes,
right,
yes.
You know, when gold was going up, you had Paulson buying it, you had Vinnick buying it, you had Soros buying it.
Yeah.
What ended up happening is that, you know, gold starts pulling back, Paulson had to sell half of it.
Yeah.
Well, Vinnick is nowhere to be seen, and Soros is nowhere to be seen. I'm saying to myself, now, you can't tell the short positions, but I'm looking at that. They're looking at the same thing as me. What happens on a Bloomberg is this, folks, is that, you know, it's wicked powerful, but it's more powerful than people realize, okay? what happens is that
well, information is king, and that's where it's so good.
And you have the information too, though, of all the portfolios.
Yeah.
So I can take all these portfolios, put them together, and look and say, okay, where is everyone? Now that information is still 90 days late. Okay,
maximum.
But you have it. You have it. So what has happened is this: is that the only guy that's still out there, and basically he's a target, is Paulson.
Yeah.
Because they know that he's down. One fund is down 24%. The other fund is down 36%. That's insane.
Yeah.
That's big money.
Yeah,
okay?
yeah.
Sad but true. Well, those other big funds, they're sitting there saying, they're licking their chops, man.
Yeah.
You know what I'm saying? I'm going to hammer this guy. And they're hammering him. You don't know who it is, but that's the texture of it. You know what I mean?
Yeah.
Because they're just sitting there. And I suspect, though, there are large hedge funds that do know subscribers that are saying that. You see, what happens, folks, is that inside a fund, you either got the redemptions that are coming in,
right.
But then what you also have is that you have, because he's down so much, you have a shrinkage of the fund.
Yeah.
So shrinkage of the fund means you have to sell yourself without even forced selling.
Right.
And that's what I think is going on in the gold market, because when I look at it, it's like, and then the biggest thing, even last night when I was preparing for this, I realized that Fidelity has disappeared.
Right,
disappeared.
Right.
Fidelity, folks, up until about a year and a half ago, they were the biggest owner of every single gold equity there was. Every single one of them.
Yeah.
You try to pull, in fact, you can't even find them now.
Yeah.
So until they come back in the marketplace, that's what's going on here.
Yeah.
And so
that's why I say the information that you provided was just, everybody, Boris, just everybody was listening, and because it was a different take. It was just, a different way to come in and take a look and analyze and understand where things were going and why.
Yeah, and you know what happens? I think that even, I'm sure that most folks who listen to TFNN, you think we're all technical, and the technicals are there, but you always got to remember something. I say many times, your technicals, you're looking backwards, your fundamentals, you're looking backwards. You believe what the CEOs are saying if you're a fundamentalist, and the technicals, you believe in what the history of the market is, meaning where the money's going. What I think we try to do here is that you got to look at the common sense deal. Right. And what I love, and it says even being in the real estate business now, you've heard me say in the bond market, I felt like I owned it in the 80s. Because what ends up happening is that I'm always backing into things. I knew I was selling it before I was buying it. Just like I play hockey in defense. Yes. So hockey in defense was always, I was going backwards in my head coming out. Saying, where's he going? So that's the same in the real estate. It's like, okay, hold it. How much of the cash flow, and back into it knowing that, okay, we're going to make 30% on this period. That's my number. Do you know what I mean?
Yeah.
So, because if you're back into it, it's different than going forward. You know. But it's going to be interesting to see where this shakes out, because the battle's out here right now. There's no doubt.
Well, it was nice. I don't know if you caught the end of what they were playing, the Jaws music for.
No, I didn't. But
I hope that we caught that. I hope we catch that piece of it, because it was the Jaws music.
It's so funny, folks. You know what was great is that I'm driving home and I'm getting a whole bunch of texts saying, "Hey, they're playing Jaws music."
Oh, good. Okay, cool. Okay, I loved it.
Anyway. So, market-wise out here, I wish yesterday that S&P hit that top.
Tested it,
Kills me it didn't. And what you have, folks, is this. The cash S&P, 1474.53. We've hit 1472.12. Like, we just hit it and get it over with, man. Do you know what I mean?
Yes, I do.
Seriously.
Come on. Hey, we got a lot of time left in the day.
No, we do. I was hoping it would hit it in the open so it would really get some action. You know what I mean?
Yes.
And, of course, Apple, folks, Apple, the comeback kid from yesterday, the day before. But what Apple's going to have now is going to have another high-volume, low week going into all of those. So today's, it's on the weekly. I mean, we came in with volume yesterday, but it's really hammering that low. So how Apple trades out here today is going to say quite a bit, man. Do you know what I mean?
Absolutely. You can switch over your...
Oh, okay. Yes.
Let's see here. Let's see, on the 10-minute, 5-minute chart here. The 5-minute chart, what I was pointing out to folks yesterday, when I see this, this is just 5-minute chart, when I see this kind of linear move down,
right,
and I see volume just kind of pretty steady all the way down, it's a prop desk. My conclusion is it's a prop desk that's selling, that's trying to just simply get out of a position.
Right.
So a couple traders got some indication early in the morning. when they needed to be out, how many shares, and just kind of keep this under control.
Yeah,
when you just get that straight linear move down and no real blips in the volume out there.
Yeah, no doubt. Because what you definitely have, when you see that support, is basically staying. And when that support goes, man, it's going to be big trouble.
Yes.
You know what I mean? Big trouble. I mean, that 501 support, folks. There's nothing in between 501 and like 350.
Yeah.
Because that's how Apple went up.
There's no floors out there.
No,
There's
that's
no
how
base
Apple
building,
went up.
no nothing.
Yeah, you know. I mean, it went up, and it went up exponential. I'm trying to find my VGA here. Al.
You can do it in 2 minutes. When we're up.
Yeah, I'm just having a hard time.
Yeah, absolutely.
So, Darrell, what's going to be going on, man?
Dude, I'm just loving this market. That's all. I'm like, bring it on. Earnings season is sort of like hunting season for traders, you know?
Yeah.
So just get out there, and things are moving and shaking, and a lot of volatility, and give me the movement, and I'll just hop in there and take advantage of it.
Well, yesterday was interesting because it seemed that
yesterday was great.
That move down came out of nowhere. I mean, I
called that the entire thing. It was great. It was a gap fill, man. It was a gap fill.
It was a gap fill, huh?
Yeah.
No, that's good, man. I'm just. It certainly did do it. You know. I mean, I loved it. I didn't like the move back top side.
Yeah. Well,
that one I did not have a clue was about to happen, but I was done after the gap fills happened, so I was okay.
Yeah, except that we knew the 1474 is a target out there, and as I was pointing out to folks this morning, and this is the 60-minute chart of the ES Mini. And, when you've got these consolidation patterns that are out here, this one was building ever since market moved up on January 2nd.
Okay.
That there's a high probability, and it's like 75% of the time, that when the consolidation breaks, it's going to break in the direction that it came from. And knowing that 1474 was out there,
right.
And when you started taking a look at the actual consolidation range, you're looking at about a 10-point range, on top of it being 1460.
Right.
And so it actually did, in essence, what it was supposed to do, except missed it by 2 points.
I know,
but so there's enough indications out there, and each time it kept trying to bust it down. Now you've got a ton of lunar astro aspects.
Oh, do we?
Oh yeah. So between today and early next week, we should see something take place here. We should see a turn. And on the as pointed out on the weekly chart of the New York Stock Exchange, what it did is made a 3-drive to a top pattern.
Oh, I saw you still done
Yeah.
that.
So it's made a 3-drive to a top pattern, coming right into the highs of 100% move, May 6, 2011.
Really?
So I mean, it is those highs are 87.18, and it's gotten up to 87.17.
Wow.
That should qualify for 100% move.
Oh, I like that. I like that. No doubt.
Yeah.
You stay right there, folks. Darrell Martin, Steve Rhodes, Tom O'Brien. Appreciate you growling and prowling with us. Don't forget, folks, if you are out in the Colorado area, Darrell and I are going to be there February 2nd. Free workshop sponsored by Nadex. Come over to our website at TFNN. You sign up right now. We're going to be right back.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Wealth Management. Simply picking the right stocks is not enough. Research has shown that choosing the right proportions of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley believes a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what an asset allocation and a Morgan Stanley Wealth Management financial advisor can do for you. Call Angela O'Brien, First Vice President and Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Wealth Management, LLC. Member SIPC.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Darrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN is proud to partner with Great Panther Silver for another exciting silver coin giveaway. The Great Panther Silver Super Silver Giveaway begins the week of January 28th and we'll be choosing 47 lucky winners. It's free to enter with absolutely no strings attached. Just visit the front page of TFNN.com today to fill out your entry form. Every hour that we're on the air, 9 a.m. to 6 p.m. the week of January 28th, we'll be randomly choosing one lucky winner that will win a silver coin or bar from Great Panther Silver and TFNN. And the final hour of the week, Friday, February 1st, we'll choose 3 lucky winners. That's 47 winners in just 1 week with over $1,000 in silver given away to our loyal listeners. Register today by visiting the front page of TFNN.com. And for more information on Great Panther Silver, you can click on their banner on the front page of TFNN.com or check them out on the NYSE Amex symbol GPL or on the Toronto Stock Exchange symbol GPR.
This segment is brought to you by Goldfields. For more information, just click the Goldfields banner on the front page of TFNN.com.
Welcome back, folks. Darrell Rhodes. Darrell Rhodes. See, we'll all be married. Darrell Martin, Steve Rhodes, Tom O'Brien. We appreciate you growling and prowling with us out here. Right now, the Dow is off 24, Nasdaq's off 6, S&Ps are off 4.5, and we got gold down 17. And you know, what you have here, folks, is always dangerous on Fridays when the contract is going south. And you know, we'll see. Where it's at right now is not a big deal. You know, if it holds these prices, it's fine. If it breaks these lows of 16.55, you can see 16.25 in a heartbeat today. It's got about an hour to do anything, to do something. Because on Friday, the move normally happens by 11:30.
Yeah.
You know what I mean?
So currency-wise, King.
Yeah,
my
King dollar got hammered, man. I mean, the baby got hammered yesterday beyond belief. Now, I like what's happening today, because it had to get under this level. You know, we got 18,000 contracts. You know, the index right now, folks, is trading at the 79.61 area, and that 79.01 though is game to get tested. I mean, that's the low out there. Yeah. You know what I mean? So that was a big number, though, man. No doubt about it.
Well, the euro is up over the swing point that went back to May 1st of 2012. That area had acted as a pretty decent resistance level. And so now what it's up against is this little cluster up here, and it's a pretty good-sized cluster of swing points that go back into March of 2012. So, it just continues to move up into some resistance zones out here. And, expansion-wise, if we just take a look at expansions of the last set of swing points, this thing could move to the 1.27. It's really almost completed that move up to the 1.272 level. So
look at that, huh?
Yeah.
And hey, Darrell, when you're trading the Nadex product with the dollar-euro, right? And folks, if you do trade currency, go over there and test drive this product, because the product is dynamite. Now, what I'd love to actually have them do though is open up. I like the 2-hour ones, but it seems like the 2-hour ones or the 4-hour ones only go from 4 o'clock in the morning and 6 o'clock to 8 o'clock, right? Then you got to get on. You got to go on.
What they do on the spreads is, for just the forex is they do the short term forex spreads all night, whereas the indices you only get dailies.
Yes.
And then at 8 a.m. Eastern time, then they launch one that goes all the way till 3 o'clock.
Right. We're gonna talk to Dan and see if they'll launch one.
They have like a 6 to 11 and 11 to
10
8
or something. Because in our market,
they do have an 8 to 10. They have an 8 to 10.
They have an 8 to 10.
They have an 8 to 10. You mean in the morning or at night?
In the morning.
Yeah.
I don't know how I'm missing that then.
Yeah.
Okay.
It just expired.
No, I know that, but I've been trading that. I guess that's because that'd be the one, because most of the movement between the dollar and the euro, is either going to be at 4:30, and then really 8 after 8 o'clock.
Yes.
If it's going to move, that's when it's going to move. So.
Yeah, they have them every 2 hours, and then they have one from 6 to 11, one from 11 to 8, and then one from 8 to 3. But they also have them every 2 hours in between.
Okay, cool. Let's go to
Mark.
Here
we got 11 and 12 right here, expiring, coming up right up.
Yeah. Let's go to Mark in Fort Collins. Hey, Mark, what's going on?
Not too much. How you doing?
Doing great, man.
Good. I have a question for you guys on a small ABC up that I think the spies might be doing. I'm looking at a weekly.
Yes.
And I'm looking at the low of the week of November 12th.
Okay, 1 second. Let me just find this. Okay. Yeah.
134.70. We had a low there. We ran up to the week of December 17th and got to 145.58, so that's about 11 points.
Yes.
And then we came back down and hit a low the week of the 31st, which was a short week.
That's right.
And 139, so you had 11 points to 139.54. You might get up to about 150.54. And I'm looking at the break of the B point of December 17th possibly happening, because that was a 5-day week, and the other week was a 4-day week. So it's pretty close on volume. So if we are breaking that B point, I know there's another swing point that you got to take out at that 148.11. That has pretty small volume there. So I'm wondering if we might not be doing, before we turn around again, we aren't going to get up to the 150.
Well, I guess I have the week of December 21st. I have 887 million traded.
Yeah, he's adjusting the volume on January 4th, which would, because of the closed on January 1st, New Year's Day. So take 700 million divided by 4
times 5.
Just to get so. It's,
no, that's right. Yeah. That's right. That's right. You stay right there, man. This is Darrell Rhodes, Tom O'Brien, Steve Rhodes. We appreciate you growling and prowling with us, folks. We're going to be coming right back. Yeah, so that's...
Just recently, on December 28th, Market Insight subscribers were advised to go long the QQQ, the NASDAQ 100 ETF, on December 28th at $63.91. And only 2 trading days later, after a huge jump in the markets, Market Insight subscribers were advised to sell the QQQ at $66.64 for a $2.73 or 4.27% profit to start off 2013. At the same time, Tom O'Brien had advised his clients looking for a more leveraged trade that they could could have initiated a position in the QLD, the ProShares Ultra QQQ ETF, and over the same 2 trading days, Market Insights subscribers were able to lock in a $4.48 profit or an 8.47% gain in just 1 trade. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. Cancel at any time during your free trial and pay nothing. Don't miss out on the next great trading opportunity in 2013. Act today. If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now. Darrell Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Darrell Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Crocodile Gold. For more information, just click the Crocodile Gold banner on the front page of TFNN.com.
Welcome back, folks. Darrell Martin, Steve Rhodes, Tom O'Brien. We appreciate you growling and prowling with us out here. And, folks, if you haven't test drove the Nadex platform yet, come over to our website at TFNN. You're going to see the banner right there. You can bring that platform up. They'll put $25,000 in funny money. And when you do that, folks, do yourself a favor. And, you know, each and every one of us, and believe me, you all start with the binaries. And you know, the binaries, yeah, you can go to the moon, but get your head wrapped around the spreads. Because the binaries, and with the differences, folks, the binaries are yes or no, and yeah, you can put up $25 and make $400, okay? But the reality is that your probabilities of doing that are dramatically less than dealing with the spreads. Yeah. You know? So it's...
Let's go back to Mark.
Okay.
Because we were taking a look at the...
Hey, Mark, what's happening, brother?
And then I was also looking back at the daily, and it also looks like it confirmed ABC up there because the daily was 150 150 million got taken out by 191 million.
Yeah, no.
And that's the better way to look at it, because you know, if you do the math on the weekly, it's pretty close, so that's good enough. But the daily, you come back and try to confirm it. You know, the biggest problem on the daily, you know, was the pullback, because you got 2 pullbacks on big volume.
That's
so you got 245 million shares on December 21st, and then 243. And the way that Tom takes a look at A to B equals CD patterns, that doesn't.
No, the volume can't expand out of it at all. You know, but you know, the bottom line is that I think that I would have loved to see that cash S&P hit the highs today, man. When you get this close to highs, it normally wants to tag them. Do you know what I mean? Yeah. Like, it was interesting yesterday. Tom DeMark, okay, who's into he has a lot of different systems and they work consistently. Yes. What he was talking about was he thinks the S&P is going to go to 1,500. Okay. And then it's going to basically come back 5% off that level. Now, the way he's getting to 1,500, he was just saying that, hey, listen, when it gets this close to, a round number, that's what he was dealing with, saying, okay, that's what it wants to get to. Okay. And then that was the first paragraph. And the second paragraph, he turned around and said, he says, you know what? He says, but I think it's going to stop right before it because everyone's going to be waiting for that 1,500. Yeah. Now, that is real possible what just happened to us on this cash S&P right now. Yes. Now, within 2 points. Right. Now, the confirmation would be that you need an expansion of volume downtown, which we have not gotten. Yeah. Period. Do you know what I mean? Right. Meaning right now. Do you know what I mean? We've got it on a consistent basis going back 6 months, but Apple keeps coming back and the market keeps coming back. It's going to be about Apple. It's weird, but the reality is that Apple cracks, and it cracks the NDX, and it's putting a hammer on the S&P.
Absolutely.
Yeah.
Hey, one more.
Go ahead.
Oh, sorry. I have one more question for you, if you don't mind looking at the small caps, the IWMs.
Yes.
We've got from the week of October of 2011 all the way up to the week of September 10th of 2012. We've got a pretty big A leg. It's like 25 points. And then we came back down to 76.13 on the November 12th of 2012. And we just broke that B point from last what is it, August. I guess it was August that we had that B point. We just broke that on volume. Does that mean we're headed all the way up to like close to 100?
Yeah.
There's no question on the IWM. The IWM is given the best confirming signal to the upside. Right. Big time.
And what that's all about, I don't know if you heard me before, but I remember when we first started in the resource business. Okay. The small caps are the first ones that come back, and what was going on is that all these resource stocks are $3, $4, $5. They went to 30, 40, 50. What's happening here? This is the housing business. That's that infrastructure inside there. That segment. What most people are doing is just looking at the housing, the builders, but that's not it. It's the rug makers, it's the floors, it's the tools, it's all of those things. Because I can tell you, I mean. Factually, we're doing it. So I know how many people we're employing, and we're putting the people to work every single day. And for a small, fund, we're putting a lot of people to work.
Yes.
So I suspect, the small caps, the small caps are real, man. So
I have a question for you in the small caps.
Yeah.
That came up. Interactive Brokers has just raised small cap margins to 100% on the stocks in the small caps that hit a certain level.
Yeah.
Any idea why they might do that?
Yeah, because what would end up happening is that when they're looking internally, they have way too many people that are short the small caps. So their correlation is looking like, you got to be kidding me, man. We're not going to handle this. And that's what every big broker dealer will do ASAP when they see something that's so lopsided. So that's a problem. I'm glad you just brought it up, Darrell, because I've seen that happen before. But whether it's Interactive Brokers, no doubt, TD Ameritrade, Thinkorswim, Schwab, when they do Interactive, I mean, they have a bulk of clients, okay? And when they see that it's on one side, well, the small caps inside the futures market, we know what happens in the small caps in the futures market, folks, is that the burst going up or going down, oh, man, they're so fast, it's unbelievable. It's right, Darrell? I mean, it's great trading them, but 3 or 4 points in the small caps, folks, is monster money. So I think they're just trying to protect themselves, Darrell. But that's a good heads up for us.
Well, in the schedule on that, which might be something that you might want to be tightening stops and stuff, because it could cause some, people to have to liquidate their positions.
Oh, it will. Oh, no, it's definitely going to have to liquidate their positions.
And so they're going to go in, and it looks like as of today, they're 50%. As of Wednesday, they're going to 75%. And as of the 21st...
No, this is good feedback.
They're going 100%.
This is good feedback. That's definitely a liquidation. That's definitely going to be a forced liquidation.
Yeah.
And here are all the symbols that they're going to force right here. I'll post that over in the den.
Okay, cool.
Okay.
See.
So one of the other things you can be looking for, Mark, is on the IWM. If you put it on the weekly chart, it's just above the the old resistance area. Which is that May 6th high out there of 86, 81. So we're still sitting right there where, just like Walmart, look, Walmart had a break above a large consolidation area and lasted for, I don't remember,
2 months.
2 months, came back inside.
Right.
So, the small caps, I think the Russell and the, just like you're looking at Apple, that's being a big signal.
Right.
I'm also looking at the New York Stock Exchange and the Russell to also give us some signals out there, from the real strength. So weakness and strength, I want to see both signals.
No, there's no doubt. Because, see, what happens is this. So when an indice is the strongest, like the small caps right now. So when we pull back, I can expect, just as Steve, the small caps will pull back too. What the difference is that each and every pullback, that pulls back smaller.
Oh, no question.
It goes higher in the next one, so all of a sudden, like 2 years down the road, well, the small caps are at the number we were just talking about, Mark. That's how that goes. If you go back and you look at the small caps from 2002 to 2004 or 5, that's what it, you know what I mean?
Yeah, and there's no question that on any gifts of any kind of retracement, pullback, whatever, and you get a reversal signal, so the small caps you want to be taking a look at going long.
Yeah, exactly.
Right. So are you looking like maybe between the 85 and 80, maybe 2 range is like the buy-in there, or on a retracement, or are you looking for something lower than that? Or?
Well, it would all depend on how you get into that breakout area first of that 82.35 that you're looking at. If you come in there with any type of expansion at volume, then it'd be like, okay, you've got a deeper retracement. But what happens, which would be beautiful, is that on a deeper retracement, because that took the highs out on the weekly and probably on the monthly, I'd have a bullhorn on.
Yeah. One more question. How do you view the difference between the swing point from way back in the May 2nd, 2011, which had $338 million on the weekly? That got taken out only with $209 million in August of 2012. And then we took out...
Okay, 1 second. Hold on. Get me in there again. Say that again.
We're on the IWM weekly.
I get the May 6th, right? Yeah.
Yeah, May 6th week had $338 million.
Right.
We took that out in August with $209 million, but by not very much, and then we closed below it. So that was a failure. But then we just took both of those swings out with only $259.
Right.
It was more than the August of this year, but it was less than the original swing point.
Oh, that's a good question.
Yeah.
Okay, so
what do you look at as your B point?
Well, what I would look at there is
got to be conservative, the hardest one.
Yeah, the hardest one. It's 338, so it really does need more in that context. And I guess so. If we switch this, what we're doing, folks, is now that was the weekly. So then what to do is switch it to the monthly, and see how we're setting up. And on the monthly, 1.3 billion. See, the monthly's going to be shot. The monthly's not there right now. So the monthly's going to need more. This is pretty cool, man. It really is. So
now you got complex ABC.
No, it's great. What I love about this. So watch what happens, folks. What you just heard is this. So as we're bisecting and dissecting that, we know that the small caps is the best looking index.
Absolutely.
But in fact, when you look at that on a monthly basis, the small caps can't make it either.
Yeah.
And if the small caps can't make it, let me tell you something. The rest of this market's not going anywhere. So.
Okay.
Thanks, man, for all the great questions.
Yeah, thanks for chewing on this with me. Appreciate it.
Absolutely.
All right.
Chewing on it.
Sharks. The sharks are in the water.
The sharks are in the water, man. those sharks, man, I'm telling you, man.
Yeah, we got to get the Jaws music up for you.
Yeah.
For your show today.
Yeah,
okay,
totally.
we get Steve-O to get the Jaws music
that's
for
funny,
you.
Man. I'm telling you. But they are sharks. They,
Sure. Absolutely.
Outside of politics, folks, you know, the inside the financial business, those large managers, I mean, that has to be one of the toughest jobs in the world, man. You know, you're sitting there and, you know, you got to make the money off someone. You got to remember something. We're in a zero-sum game, man. If you're going to make money, you're taking it off someone. So bottom line is that these guys, and women, you know, basically, when they see, you know, the fish swimming around the water, and in this case, the thing that's weird about this one is that Paulson is no small fish.
Right.
Do you know what I mean?
No, absolutely.
Unfortunately, for him, he's in a market that's too small, the gold market.
Yeah.
You know? It was not bad in the way up. He was pumping it up. But when the way down, when the rest of the people abandoned the boat, well, you know, now they're looking at the boat with a couple torpedoes saying, hey, this is pretty good.
Yeah.
You know?
So when you take a look at, Anglo Shante this morning.
Yes.
So that had pressure yesterday.
And he was so lucky yesterday. So I was bringing this up in the afternoon show. It's AU, folks, okay? AU, he owns 27 million shares, last filing. This is a stock that he's down big on, okay? Because if I first I would just bring it back, and now if you want to see this in 10 years, okay, he's lost big money. 27 million shares, no matter where you want to look, that he got in, is big money.
Yeah.
Yesterday, because the gold stocks are going up, I can picture he was so happy, like, oh, thank you. Someone kept buying the stock, but you can see the dramatic expansion in volume, 2.9 million.
You've got a new high volume low out there.
Yeah, and it's ABC down anyway. It already broke the B point. It broke the B point 2 days ago, 3 days ago, 4 days ago now. It broke the B point, broke with volume, and there's nothing underneath this. And what happens with, see, look at this.
Wow, there is nothing underneath this.
Oh, no, it's a 16, man. This is a big ABC down. And
so that is a problem.
So that's on the technical basis. The fundamental basis, this company here, Ashanti, was bankrupt. Ashanti was one of the first gold companies that ever went bankrupt 15 years ago. Anglo Gold got them out of bankruptcy. Their problem is the amount of gold they have is minimal as to how much it costs to get them out of the ground. I mean, you're talking about $1,600 gold here, $1,500 gold.
Really?
Yeah. Now they have deeper mines, but, you know, on a fundamental basis, they got a problem, man. You know what I mean? I think he was playing...
So what do you think, what attracted him to that?
I think he was playing... I think he was probably playing the Rand deal, because, you know, but that, to me, wasn't the one. And I thought, you know, it just wasn't the one because of that parameter, you know, because when you do look at the Rand, because, you know, the Rand is a beautiful spot right now. It's 8.73.
Yeah.
So the Rand could save them. I mean, that's one side of it. But when you do look at the holding structure, if you're watching Tiger TV right now, I'll just bring up, you know, well, first off, I'll bring up who owns it, but I can bring up his portfolio if you want to see this. This gets interesting. I'll bring it up. Okay, so what you're looking at on Tiger TV right now, you're looking at, he's the largest holder, 7.4%, 28 million shares. Last filing, he sold 9.3. Now watch this. I'm going to change the texture of this so you can just see who's coming into it. Now, Renaissance Technologies is coming into it. That was Jim Simons. Renaissance, folks, if you don't know who Renaissance is the one fund that makes more than anyone and everyone on a continual basis, has for the last 20 years. And you don't hear about them all the time. But on the way out now, you can see what's happening. Wellington Management, they're going south. They got almost everything out. Now, if we pull up Paulson's portfolio, and this is what funds are doing. So what you're going to see is that I'm going to hit another key, and I'm going to bring up his whole portfolio. Okay, it opened on another screen. Let me get the other screen up for you. I'll change the texture of this for a second. But when you see this, you're going to see how this works. And, you know, they just sit there and have a freaking field day. So what you have here is this. This portfolio, folks, is 5 pages. And there's all different portfolios. But in this one here, see that right off the bat? AEM? AEM has 1 million shares left. ANV, 1.5 million. AU, 28 million. Oh, really? Let me go to the next one. Okay, 1 second. Go to the next page. As you bring this down, here's GFI, 6.5 million. Here's the GLD, 21 million.
Wow.
Rango Resources, 930,000.
you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Let me tell you something, folks. I have people coming up to me saying, I just can't believe the amount of work that Steve does on his newsletter. And I says, I absolutely agree.
That is a recent clip from the Money Masters show that Tom and I do each day at TFNN. My newsletter service, Mastering Probability, is much, much more than a newsletter. Yes, it's outperformed the S&P 500 by 100% during the last 15 months. But more importantly, it's an extraordinary education, a roadmap for your success. And it's yours risk-free for the next 30 days. Just go to the homepage of TFNN.com and click on my name, Steve Rhodes, and then Mastering Probability, because everyone needs a success strategy. For most, it's a competitive edge, the will to win, the drive to overcome any obstacle. Whatever you call it, winners find a way. Find your way to Mastering Probability today, because your journey to extraordinary rewards is just one click away.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
I love it.
Get the shocks.
Gotta love it.
Darrell Martin,
What beach was Jaws? Is that up in the northeast?
Martha's Vineyard.
Okay.
Hey, folks, if you want to hear a sick story, this is pretty wild. So picture this. You know, my son Tommy, he's the operator. He runs this company. But when him and Caitlin, when they were young, we lived in Martha's Vineyard. Okay.
Okay.
So this is a sick story too. They were probably, I don't know, Caitlin might have been 7 years old and Tommy was 9, 10. And I'd put them in the back. I get pictures of them. in the back of the whaler, right? They got a life jacket on, and I got ropes out, right?
Yeah.
And we're going along the Martha's Vineyard, right where all the sharks were, and we're taking pictures. and then they'd play this game that did Navy scuba divers. So I'd be whaling on the whaler, and then jumping out of the whaler. I think about something. I mean, it'd get me for child abuse now, I think. No, I'm not kidding.
Yeah.
Oh, man, 16. So market-wise out here, folks, bottom line is that, every pullback, basically, Apple's hanging up here. I mean, so if this market stays at these highs, man, I'd just love to see this S&P cash get tagged, man.
Well, if not today, Monday.
Yeah.
Start of a new week.
No doubt. For start of a new week, though, if they come up with energy, man, that could get interesting. Meaning, this cash S&P could only get down to 1467 thus far. Oh, watch this. Oh, this is sick. So, if we close today under 1467.94, that would say that you got a failure in the daily and the weekly.
Right.
We hit 1467.58, but now we're over it again. So that's the number. And folks, what is sick about the marketplace? Does 1/10 of one mean something? Yeah, it does.
Yeah.
Isn't that crazy?
No, for sure. And I say other signals you'd be looking for today, and it's just this is where bulls and bears have to be cautious. You got to be looking for signals,
right?
In the New York Stock Exchange, knowing that we're up, knowing where we're at. What you're looking for is if you get a close below 86.76, all of a sudden you've got your first bearish reversal candle.
Okay.
Or you've got other patterns that are forming.
Yeah,
we're not there yet.
Right.
Not there yet at all. But those are the types of caution signs that you got to be looking at.
Right, no doubt. Hey, Darrell, can you talk a little bit about your analyzer for the Nadex product?
Yeah. Basically what it is it goes in and the Nadex spreads. I mean, there's a lot of stuff on them, and they can get really confusing. You're hopping in here, and you're like, okay, I want to trade, gold, or I want to trade, whatever.
Right.
And when you're trying to go in and pull a product up, maybe it's the indices. Maybe you want to go in and you do want to trade the S&P. And all of a sudden you go in here, and I don't know how much y'all can see over there, but there's, an insane amount of spreads that you're going to have to choose from.
Yes.
So you go in here, and there's 3 from 10 to 12, 3 from 11 to 1, 3 from 8 to 4:15, 3 from 9 to 11, 3 from 6 p.m. to 4:15 the next day. There's another one right there. So you got 3, 6, 9, 12, 15, 16 spreads. And I don't know about you, but when I'm ready to place a trade on the S&P, I really don't feel like going out and analyzing 16 different possibilities of how to place it.
Exactly.
And so what this does, it allows you to go in and see here's all the spreads, all the buys, all the sells, right there.
Right.
And you can instantly go in and I go, I want to trade the S&P, and you can choose any Nadex market.
Yes.
And let's just say you wanted to sell, okay?
Yes.
You could narrow it down. Instantly, it'll drop off all the buys.
Okay.
And then you can say, you know what? I want to be able to at least have the potential to make $1 for every dollar I'm risking at a very minimum.
Right.
You hit that button right there. Now it drops off all the other ones. And, I don't think this will have an impact at this point, but you can say I don't want to risk more than $100. Now that you've done that, you got 3 spreads. You pick the best one for you. Both these are expiring near the end of the day. And this one only has to move like less than a point to be break even.
Look at that.
It's an awesome tool. Really an awesome tool.
Quick sell, boom, tickets up and opened in the Nadex platform. Automatically hit place order, you're good to go.
You stay right there, folks. Get our man, Mr. Basil Chapman, coming up next.
Take care, folks. Have a great weekend.